Okay, it's 10 o'clock. I will call the York County Board of Commissioners meeting to order for May 6, 2026. Welcome. So I'll lead us in the pledge, and then John Kleindance will lead us in the invocation. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Would you join me in an attitude of prayer? Lord, we pray that as our leaders meet today together, they do so under your watch and with your hand on their shoulders. Come and take part in this meeting. We give thanks for all that we have, and we give you all the glory. We give you thanks for every day that you give us. We're here today to discuss topics that will help people and move York County forward in building a better York County. Grant our leaders the wisdom to make the meeting productive, effective, and powerful. Guide the decisions made today to help as many as possible. You work through us. We start with you and we end with you.
Amen. Okay, we'll move on to item number 2 on the agenda.
I make a motion to approve the minutes from the April 29th, 2026 Board of Commissioners meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. Our CFO is filling in for our chief clerk today. So anything that Mr. Dahl wanted reported?
There's nothing to report this week.
Okay, all right. I will open up for any public comment as relates to items on the agenda. Hearing and seeing none, if we could move on to new business.
Madam President, I move to adopt items number 1 through 17 on this morning's agenda as presented.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carries. There were no executive sessions since our last meeting. We do have a proclamation today. May seems to be Proclamation Month for some reason. And today we have a proclamation in recognition of Older Americans Month.
Good morning, everyone. Gives me a great privilege this morning to read into the record a proclamation designating May as Older Americans Month here in York County. Someone who has a background in gerontological issues, it's a great privilege to be able to do this. And this morning, the proclamation reads, whereas since 1963, May has been recognized as Older Americans Month in the United States, and whereas more than 4 in 10 York County residents are age 50 and older, and this population, specifically those age 65 and older, is growing faster than any other age group. And whereas we believe every person, regardless of age, has something to contribute and deserves meaningful choices in where they live, how they spend their time, and how to move around their community. And whereas York County has participated in the World Health Organization's global network for age-friendly cities and communities through the AARP network of age-friendly states and communities since 2020. And whereas a broad coalition of community partners have collaborated to remove barriers to aging well by asking, does this work for someone age 8 and age 80? A question that leads to better environments for all. And whereas the York County Community Foundation and York County Planning Commission, in partnership with community stakeholders, have developed a plan for the second 5-year cycle of age-friendly York County, building on the progress of the first. And whereas this next phase will bring together organizations across the county to improve housing, transportation, lifelong learning, and intergenerational. Intergenerational, thank you. Can't read this morning. Programming, dementia awareness, municipal support, and respect and social inclusion for older York Countyans. Now, therefore, we, the Commissioners of York County, Pennsylvania, hereby proclaim May 2026 as Older Americans Month in York County. and express our appreciation to the organizations that provide services and advocate for our older adults, and further proclaim our support and commitment to the second cycle of age-friendly York County, given this day in York, in the Commonwealth of Pennsylvania, on the 6th day of May in the year of our Lord, 2026. And we have numerous members of the mentioned bodies here, and I'm seeing the Planning Commission represented, and would like to call, and also the Community Foundation, and if you would like to step forward and make a few comments.
We also have Mark Shea, who's the Director of Area Agency on Aging. So if Mark would like to share a few words, he's welcome to do so as well.
Good morning, Commissioners, York County staff, and guests. My name is Kathy Bollinger, Director of Grant Making at the York County Community Foundation. Our organization, in partnership with the York County Planning Commission, co-leads Age-Friendly York County. We're grateful to be here this morning and to receive this proclamation of support.
And good morning, I'm Mike Pritchard. I'm the Director of the York County Planning Commission. Across Pennsylvania, communities are recognizing that planning for an aging population isn't just about older adults, it's about creating stronger, more livable communities for everyone. We are proud to partner with the Community Foundation in this important work.
At York County Community Foundation, our role is to bring together philanthropy, partnerships, and community leadership to address the issues that matter most in York County. We believe communities thrive when they are designed for people of all ages. When we make our community more accessible, connected, and inclusive for older adults, we make them better for everyone.
At the Planning Commission, our work focuses on the long-term decisions that shape how our communities grow and function, from land use and housing to transportation and community design. Age-Friendly York County sits at the intersection of this planning work and strong community partnerships.
And that's why our two organizations co-lead this effort. By combining YCCF's ability to convene partners and support community initiatives with the Planning Commission's expertise, we can move this work forward in a way that is both collaborative and sustainable.
Together, we guide York County's participation in the AARP network of age-friendly states and communities. This framework helps us evaluate how well we support residents as they age and identify practical improvements in areas like housing, transportation, and community design, both in our built and social environments.
Age-Friendly York County is focused on 6 county-wide goals. 3 relate to social environment, lifelong learning and intergenerational programming, dementia awareness, and respect and social inclusion.
The other 3 focus on the built environment, housing, transportation, and municipal support. We invite everyone to visit agefriendlyyorkcounty.org to learn more about these goals and how we will measure progress, because building an age-friendly community is something that we can do together.
We're grateful to the many organizations, municipalities, businesses, and community leaders helping move forward this work. These partners will track progress, share data, and come together twice a year to review outcomes and identify ways to remove barriers.
So thank you again, Commissioners, for this proclamation and for your support in building a York County that works for every generation.
Good morning, everyone. I am Mark Shea. I'm the Director of the York County Aging Office. And I have to say that this type of initiative is something that's greatly needed. Right now in our country, we see something that we've never seen before. People over the age of 60 outnumber those 18 and below, and that's never happened in our nation's history. In York County alone, we have 126,000 people over the age of 60 that our agency serves as the arm for older adults in York County. So we welcome this initiative. This should be wonderful for older adults in York County, and hopefully this spreads across Pennsylvania. Thank you.
Thanks. Okay. I will open it up for any other public comment.
Good morning to everyone. Pastor Larry Walthour, Shiloh Baptist Church here in York, Pennsylvania. Just want to remind the commission and the public, May 19th is Election Day, and we have a partnership with Rapid Transit, York County Community Foundation, and Shiloh Baptist Church. It's called Souls to the Polls. And along the fixed routes throughout that day, anyone who wants to get to any polling site along fixed routes will be able to get free transportation. This is in partnership, of course, with the York County Community Foundation, who's here today. Let me thank you for your partnership in this endeavor. If you want more information, you can call Shiloh Baptist Church at 717-854-2547 or call Rapid Transit at 1-800-632-9063. Again, on Election Day, for the entire day, we'll have free transportation, Souls to the Polls, so get out and vote. Thank you.
And just to remind everyone, the deadline to change your registration has come and gone, but not the deadline to request a vote by mail or absentee ballot. So that is next Tuesday. So if you would like to vote in that manner, please hurry up and get your request in. If you've received a ballot in the mail, please do your best to get that in the mail because time is running short. May 19th will be here before you know it. So, any other public comment? Hearing none, if I could have a motion to adjourn.
I'll make a motion to adjourn the meeting.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
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 Opposed? We are adjourned. We're just going to pause for a minute. I'm going to ask John and Mark to help me move the screen so that Treasurer Bear can actually see people at the podium.
I couldn't see you, Julie.
What?
I couldn't see it either.
Well, there you go. Okay, so we'll move on to salary board now.
I'll make a motion to approve the minutes from the April 29th, 2026 Salary Board meeting as submitted.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. I will open up for any public comment as relates to items on the agenda. Hearing and seeing none, we'll move on to item number 4.
I'll make a motion to approve the positions, salaries, and hours of work and fringe benefits as provided by existing collective bargaining agreements or as set forth in the York County Employee Handbook or York County Policy Manual for the following departments and row offices as stated below, with no additional benefits or concessions unless otherwise noted and there's listed in the agenda.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. There were no executive sessions since our last meeting. I'll open it up for any public comment. Hearing and seeing none, if I could have a motion to adjourn.
I make a motion to adjourn the meeting.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? We are adjourned, and we will move on to the retirement board.
I make a motion to approve the minutes from the April 15th, 2026 Retirement Board meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
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 Opposed? Motion carries. I will open up for any public comment as relates to items on the agenda. Hearing and seeing none. Lee, I saw him sneak in. You're up. Good morning.
Good morning.
Short motion for you.
Thank you.
Apologies for bringing the British weather with me.
We need rain, so it's okay.
Good morning. Right, so how long would you like? 5, 10, 15?
Whatever.
No more, can you do it in 10?
I can if you go forward to maybe the 4th or 5th page of the market environment. I'll just talk a little bit around markets, around the index returns.
Just tell me where.
2 more pages, sorry. The next page. Perfect. Yeah, well, I'll quickly talk around. So it's the next page. Yeah. This one here with the returns. So we did get beginning of this year was really a continuation of Q4. We still continue to see, the markets going up. And at the end of February, we were at sort of record highs. And then, as you know, we had the Iran conflict and the market sold off pretty heavily during March, to an extent that actually US stocks were down 4% in the first quarter. Now, because of that sort of big sell-off we saw, we did see a market broadening at last away from the big Mag 7 and the large tech that I've been talking about for the past 2 years. And we saw a sort of a move down in the small caps, which outperformed, and you're going to see that benefit your performance shortly. And also a move over to value away from growth stocks for the first time in 2 years. Again, obviously benefiting more pension fund investments and even your pool. The big story of the past year, though, has been international. You can see up nearly 30% in the emerging markets. Again, that was roaring. As soon as we got to the Iran war, though, the impact from the closure of Hormuz, the oil prices, is far more significant in Europe and in Asia, particularly Japan. And they're very much more dependent on oil. We're not. We're very much a closed economy within the US, so the impact on our markets has not been as bad. And what you're likely going to see here is actually rates going up again in the EU, maybe in the next couple of months, on the back of that because of the inflation spikes that we see. And so the only concern is really not just oil and gas prices, that if this goes on, they will continue to remain high. It's the sort of downstream products from those as well are causing issues. And also you've got supply issues going to happen as the year goes on, where we're really going to impact some supply chains. So expectation is inflation is going to be around and probably going up again. And that's really pushed the brakes on any expected Fed rate cuts this year. So expect rates to remain a little higher just because of this short-term impact from the closure of Hormuz. If we look at the bond market, rates did pick up in March, so that would obviously mean negative prices for bonds as well. But it did post a flat 0, and that was because the yield today is quite a bit higher than a couple of years ago, so that sort of offset the price movement. But no surprise, sub-investment grade, you can see slightly negative on that sort of risk-off trade. Spreads did widen a little bit. No surprise to see them trail. And then just to wrap up, if you look at the inflation-sensitive assets, no surprise with the closure of Hormuz and oil prices rising. Real big impact there with commodities. That energy was up nearly 40% for the quarter. Every other sector was negative. That's why the market was down. But you can see that really drove commodity prices. And then obviously REITs, infrastructure did well, again on the back of that expected inflation. They tend to be inflation hedges, those real assets. And even more so yours, because yours are private. So that's the markets quickly. If you go to the next page, we'll look at a couple of exhibits here on the, sorry, not next page, the observations page. It's about 3 pages time, 3 or 4 pages. Beginning of the next section. Next page. Perfect. So most of the information we can sort of pull from here. So we ended the quarter 624 million. As I said, the markets were down. Your policy was down 1-2, but as you probably expect, you're not going to be down as much as that the way you're positioned and diversified. You're only down 50 basis points for the quarter. I talked about some of the things that worked well, and you can see there positive attribution, those leaning into value, that defensive equity, as people are buying those sort of insurance options. That's been beneficial by over 300 basis points the past year for you. Your infrastructure continues to post that 2 to 3% every quarter. And obviously, as sort of rates went up, the shorter duration position of your fixed income did better. What was more of a headwind, and only slight headwinds with a high yield, as I say, as spreads blew out, and real estate was just marginally behind. It still posted a positive quarter, 6 quarters in a row now. Just to look back at 2025, because I know we didn't get to meet last quarter. You had a great year again in 2025, up 14%, so double what your assumed rate of return is. So I've not seen your Boom and Shine actuarial report. I don't know whether it's ready yet, but I expect when your valuation comes in, you guys are going to be pretty close to getting near to fully funded at this point. Great to see. Good. Yeah, for the past 5 years, you've had 4 years in double-digit returns, so that's good to see. And you can see that past 5 years, you know, around that 7% mark, just slightly above assumed rate of return, and pretty much what you plan for. And that's what comes in all the work we do with the committee here, looking at the asset allocation. That really dictates how we're going to position the assets, sort of projects sort of what you would expect in the future. And that's sort of what you were aiming for, that 6, 8 to 7, and that's where you came in. So as we sit here today, we're looking at the next 5 years, and you know, how do we make sure we hit that for the next 5 years? And it will mean some slight tweaking of the asset allocation over the next year or two here. But I think we wait for the conclusion of the Iran conflict before you start to make changes. And when, from a peer point of view, you can see as well, outperformed 85% of all DB plans there in the US. That's relative to over 1,000 plans. But when you factor in sort of from a Sharpe ratio point of view, when you factor in volatility, so risk-adjusted point of view, you're actually in the top 7%. So good work from the allocations. Done at low cost as well, 37 basis points, which is about 15 bits lower than the national average. We did do some rebalancing back in the fixed income in February because markets flew high. We had no idea it was going to be an Iran conflict, but it's just great policy to have. You see it every week when we occasionally will rebalance. We want to do it before the market does it for you, like it did in March, and that's why you can post a better relative return for the quarter. Go to the next page. Just one thing we've not really seen before. Actually, one more page after that. Sorry. I thought this graphic's a nice, easy one for you to see, sort of the Himalayas here. And it's just the growth of the fund from, if you look at the bottom there, you can't see it, but it's from really 2000, you're around about 100 million. There you go, perfect. And you can see it takes a while to grow that through that first decade. It was a pretty flat decade there, but then post-GFC, money became free, markets took off, and you participated. See those little bits, as I say, around the GFC there in end of 08 and obviously COVID. But by rebalancing that, you continue to grow that fund up to about 650 million at its height. Happy to say you're back above it today. Earnings season's been strong, and year to date, even though you were negative through the end of March, you're now positive, up about 5% year to date. About a good return there. But the other good thing is here. See this negative flow out now. We've not had that because the fund has done so well. Actually, your ADC is not growing as much as it used to. So as a percentage of assets, it's a lot smaller today. Yet your benefit payments continue to grow out as you get more and more retirees. So that means you're having to sell assets more today than we had to do 5-10 years ago. So that is why we do the rebalancing, and that's why you keep that powder dry, why you de-risked a little as well last year, because we sort of saw this coming down the pike here. And that's not unusual. Most DB plans are mature at this point, and they're starting to see that profile. So nothing to be shocked about. You sort of knew it was coming. So, and then just last page, if you go 2 pages, I should put the whole... This is the full performance report, not the short one, isn't it?
Keep going?
Yeah, I would keep going. It's not... This has all the pages in it. I'm sorry. I don't know whether... if you go one more page and we'll finish up on this. Okay, the next page, sorry, is calendar year, and then the year after that, the page after that we can wrap up on the total fund. So this is the rankings I was talking about. It's good for you to see. So from a pure return point of view, as I said, the last 5 years, 15 percentile. But when you see these universes, you can really see the extent of how you've outperformed. You know, the bottom of those universes of what some of your peers have actually been negative over the past 5 years. So it's been really good work. And as I said, when you then factor it in from a risk point of view, it moves even higher across all time frames. So that's sort of the target that we work with to try and achieve for the pool, and that's pretty much what we got for the patient. I won't get into all the individual ones because of the time, but we've not made any changes other than the rebalancing at this point. As I say, once the Iran conflict is over, then we'll sit down and sort of look to the future 5 years and what sort of tweaks you might need to make in a portfolio. But right now, you're diversified across lots of asset classes, as you know, and that's really sort of working well for you. It's proved out, at least in the review mirror here. No questions on the pension funds. I'm probably going to have to ask you to jump to like that page 30 or so. Well, it won't be 38. It might be page 60 or 70 for the OPEB. Maybe easier just to opposite. Like, keep going. Sorry.
That's okay.
I had the PowerPoint version. That was the shorter one I attached, but you.
We'll be
Yes,
sure
now,
to
I
get
guess.
the PowerPoint version next time.
Yeah. Apologies.
No, that's on our end.
Send them in separate emails. So you can see all the other, everyone can see the amount of fiduciary due diligence that goes on. We don't talk about it, but it's a pretty deep look at every single investment you have. You're nearly there now, coming to the end of it. Here we go. So and these will just quickly just work off the ops pages. Keep it simple for you. But the OPEB fund, as you know, that pays your retiree health benefits. It's sort of unique of 1 of 3 counties that actually acknowledged it's a liability that you have to report on, and you funded it many years ago. And that's grown quite handily for you. You're now over 45 million. Obviously, it's a smaller pool, so you're not as diversified as you would be in a benefit plan. But we still are able to do some things with this pool, and that's why, again, this was only down 50 basis points in Q1 relative to your policy down 130. Similar things work well for you, that VRP, more defensive type value stocks. And for 2025, this fund, obviously, being more in equity with it being a long-term investment pool, doesn't have the flows out like the pension fund does, so we can put a foot down a little more, and you can see you nearly made 17% last year. From a ranking point of view, that puts you in the top 5% last year of all funds. And then longer term, again, you can see top 13%. So OPEB fund's doing well as well. One change we would sort of recommend here, because of our size and scale now, you can access private infrastructure with no minimum. You've seen the benefit of that on the pension side. To me, it makes sort of sense to take your listed, especially after it posted 20% return last year, and now just sort of move that into the private one as well and clip that 2.5% sort of a quarter. You get more predictability of return because it's not listed on the markets. So that would be the only one change, you know, we'd talk to the investment committee group and sort of get that in motion. That may take 2 or 3 quarters before the money gets called in, but we can at least get that intention into IFM to make that investment. So that's really the OPEB. I mean, I talked about sort of the exhibits within the observations. So in the interest of time, I'm sorry if you'd like to scroll forward to the last section,
Sure.
which will be the DC. And again, everybody here is going to see all the due diligence that goes behind all the different investments that are within that portfolio. Now, one more section to go through, probably about a dozen pages. There we go, great, thank you. We'll finish on this page. So this is your, obviously, your 457B and also 401A deferred comp plan, which is an additional, obviously, plan that the employees of the county are very fortunate to have access to. It's been very low cost. Actually, all in the investment cost here, it's been only 11 basis points, so it's wonderfully low investment menu for you. Just like the other pension and the OPEB funds, this fund has grown with contributions and gains. It's now over $34 million. About 2/3 of the employees are probably perfectly invested exactly where they need to be, and then target date funds, which will sort of glide into more fixed income as you get closer to retirement. So you can sort of set it and forget it as an investor. Outside of that, the other third of investors, when you look at that, the investment mix, it's about an 80-20 mix. It's been pretty steady over the years. Again, not unusual to see a little bit more equity than sort of the average pension fund in those, because this is a qualified plan, deferred. Most people say increase your equities in those plans because, you know, it'll grow tax-free. And that's why you tend to see a higher equity allocation there. 11 of your 13 funds have outperformed over 5 years in an environment that it's been very difficult to outperform benchmarks just because of the market concentration of the Mag 7. The engagement, as you can see down below, continues to sort of trend upwards, slightly quarter by quarter, but the good news is it's trending upwards. And that's always sort of like what you like to see. And then there were some fund changes in Q1, if you remember. One within global, one within the small cap space, and as you can see there, one within international. And happy to say already by the end of March, all 3 of the new funds do have assets that the participants have allocated to them already. So that's good to see. So obviously made recent changes there, no other changes to make here currently, but that's your DC plan. Any questions on any of those? Thank you.
Thank you.
Thank you.
Thank you.
We're fortunate to have our pension in good working order.
Yeah.
Okay, no executive session since our last meeting. I'll open it up for any public comment. Hearing and seeing none, if I could have a motion to adjourn.
I make a motion to adjourn the meeting.
Second?
I have a motion and a second. Any discussion? Hearing none, all those in favor of adjourning signify by saying aye.
Aye.